Welcome everyone, and welcome to the EVOLVE Voices podcast, a platform to hear about the fascinating stories behind the people that power global commerce. I am Mayssa Nasr, a marketing and growth consultant, and I am your MENA podcast host for EVOLVE. Today, I'm joined by Mark Chahwan, who is the co-founder and Group CEO of Sarwa. Sarwa is the Middle East leading investment platform today. Mark launched Sarwa around 7 years ago with a clear mission to make smart investing simple, transparent, and accessible for everyone. Before founding Sarwa, Mark also worked as a strategy consultant in Canada, and he later made it to the Forbes 30 Under 30 for his groundbreaking work in fintech. Under his leadership, Sarwa has grown from zero to over 10 billion AED, Emirati dirham, in trading volume. The company has expanded from automated investing to include stocks, ETFs, and crypto trading. It's backed by a major global investor and has now reached profitability, which is a very rare milestone in the fintech space. Mark and Sarwa have been featured in Forbes, Bloomberg, CNBC, CNN, to name a few. And they are now recognized as one of the fastest growing fintechs in the region. So please welcome Mark Chahwan. Thank you, Mark.
Thank you. Thanks for the invite.
You're very welcome. So Mark, let's start from the beginning. What made you think about Sarwa, and was there like a moment for you that, it was, just a click on a button, okay, I need to make it happen?
Yeah, I think if I were to pinpoint that moment, it would be in the mountains of Lebanon.
Okay.
Where I was on vacation, stepping out from the day-to-day of consulting life. And reflecting a lot internally, actually, on what I wanted to work on, what are my strengths, what are problems worth solving for. And the one key theme was definitely finance, investing, and technology.
Okay.
And one thing the co-founding team, we kept hearing from friends and family is when it comes to money, the putting money under the mattress, or the real estate mentality, or gold. And we saw quite a big shock because, we were between the Middle East and Canada. And in Canada, North America, everyone was investing in stocks and buying fractional shares. It was very different when the conversations we were having in the Middle East, where it was much more old school, much safer, much more like physical assets. So when we saw that gap, we started asking, why doesn't this exist? Like, it seemed too good to be true as an opportunity, only to realize that there was a lack of regulatory environment to allow online account opening, easy investing.
Okay.
So we knew it was about a matter of time before this changes, and we took a bet to change the way investing gets done in the Middle East. Okay.
And how did you decide that these are going to be your co-founders?
It was very easy. It was a lot of luck, to be completely honest, because Jad, who's the CTO, has been my best friend since we were 10.
Okay.
So he was at a hedge fund as an engineer, and we would exchange a lot of ideas, and we were very close. So he was the first one that we started discussing this with.
Okay.
And we really clicked. We saw the potential, and it's something we felt we can work on for a very long time.
Okay.
And then we started working on it. So he was leading a lot of the build. I was working on more on the product side.
Okay.
Only to realize regulation is going to be so massive that it's going to take a huge amount of time. So very quickly realized 100% of our time was being spent on product and development, and no one heard about us. So we realized we needed a CMO.
Okay.
And we started asking our network, hey, do you know anyone who's really good at marketing? Nadine, she was a consultant actually at the time, and she's the sister of a very good friend, and she sent us this email that I love, of like basically a strategy per segment, everything about the UAE, because she had lived there for a while.
Okay.
So we were just shocked by the amount of like value and depth that she gave us. We had a call. Initially, it was supposed to be like a 1 month gig where she helps us, and we really clicked, and she became our third co-founder. So
nice. And did you actually start building the startup while still at Accenture
Yes.
working? Okay, because I know many people today think about any ideas. They think, okay, maybe I should leave my job to actually focus on that. So do you think it's better actually to have at the beginning, like stay at your job and, you know, just tactically trying to work on something else?
Yes, I think,
Okay.
you know, consulting, it's a very intense schedule, obviously, and you would know. So but that being said, they complement each other well, and you learn a lot through consulting. So for us, at least for me personally, I would work on Sarwa more as an idea. It was on the weekend or after work, I would work. For example, one of the first tasks was build a business plan.
Okay.
That forces you to go through the motion of really thinking through the idea.
Yes.
So that was the kind of work we were doing, or developing a prototype as a UI, as a flow of
Yes.
opening an account, what a dashboard looks like. So bringing that idea to life, and then applying to an accelerator, that was another key milestone. When I read, there was a book called Upstarts that I enjoyed. They shared how Airbnb and Uber, a lot of companies we love aren't like the story of the founder that left their job and started there, like, you know, years in the making before sometimes the founders go all in and develop that confidence and that path to commit to that idea.
All right. And how long did you stay at Accenture?
I stayed 3 years.
3 years?
3 years, and then, you know, played this. I think it took like a couple of months up to a year to really solidify that that's something we want to pursue.
And looking back at the first days of Sarwa, what were the biggest challenges that you faced?
I think it's the uncertainty of, you know, obviously in investing in startup, there's a lot of like contrarian thinking. Otherwise, you know, it would have been done before. So I think one of the big challenges early on, professionally at least, was thinking like, are we crazy for, you know, we weren't in UAE before. It was our first time living there. First time in a regulated industry, like, so we were like really had to get up to speed, but that wasn't the challenge. The challenge was rather feeling like you need to progress and having something to show for to keep doubling down on the idea. So for us, decomposing that into milestones where it's, you know, getting the first license, getting incorporated, launching. So taking the startup journey, decomposing it into a 3 month.
Yes.
That really helped, where, you know, we kept having one immediate short-term goal, so that we keep de-risking and understanding if this is going somewhere or not.
Okay. And how did you manage getting the trust of people actually at the beginning? Because as you said, you know, there was no trust, no regulation, but also no trust. So how did you break that wall actually?
I think there isn't like one thing where, you know, we did this and it put us in it was a lot of small events, and a lot of credit goes to Nadine there, where we took an approach that's very community transparent, a lot of storytelling. So we would host events, we would invite people to our office, we would do a lot of media interviews, a lot of education, a lot of blogs on financial literacy. So the approach of trust for banks is basically, we're old, trust us, we've been around for a while. For us, given that novel factor, we took a very transparent approach to let people in on the journey and tell them. And actually that we realized that resonated a lot more. People wanted to root for the underdog or for innovation, and that's part of the formula.
Even actually up until today, you are very vocal and transparent on your LinkedIn, actually. And I think it's beautiful, because not many CEOs and founders do this. So is it actually, so it's part of your strategy still today, right? Because you are very transparent, even with numbers, with everything. So it's part of the strategy that...
now it's taken a deeper level, I would say. I don't think... I think we're pushing the boundary to see how much we want to take it. But it's a lot of fun. It's a lot of fun to make LinkedIn less of the corporate professional.
It takes a lot of your time, actually.
No, I try to box it to, you know, 30 minutes a day, where usually a lot of the ideas I'll get outside of work, actually. And it's just about writing them on notes, and then and then writing and engaging with people. So, but it's time well spent. Initially, I used to see it as like a distraction, or a side thing, and it became actually a key habit of writing, connecting with people, and that's actually how we got the chance to meet.
Through LinkedIn. Yes, exactly. So tell me, today Sarwa offers many products. We talked about ETF and crypto in the introduction. How do you decide which product actually will be within Sarwa, will be available?
Yeah, I read somewhere that first-time founders make the mistake of pushing a product,
yes.
And then, not that I'm a second-time founder, but learning from them, you start to see what the pull is, and you go there instead of pushing anything.
Yeah.
So when we started, we pushed quite heavily the idea of the best way to invest is through a diversified managed portfolio, where you're not in control, and either a human or a mix of human and technology does all the decision making and management for you. With time, we realized that, especially after COVID, people wanted a lot more control. They wanted to do the buying and selling themselves.
True.
They wanted anywhere from safe to risky assets, the full spectrum. There isn't like a one size fits all.
Okay.
So we evolved our product to actually give the control to the customer, where they can buy and sell and do their own decisions, and we're just guiding them, providing the right tools.
Okay.
So.
And does technology play a big role
yes.
in Sarwa? So it's mainly technology, automation that does everything. So let's take an example. Let's say today I want to invest in Sarwa and I only have like $200. Can I?
Yeah, of course.
Okay, so what are the steps?
You basically would open an account online.
Okay.
So we pioneered selfie account opening. So you don't need to, be verified through a call or in person or anything like that. And once you open an account, it takes a few minutes, and for most people, it's an instant approval.
Okay.
Through a lot of we use also AI to validate your identity against that selfie.
And there's KYC.
Exactly.
Okay.
So then that's the first part that surprisingly was a big blocker before, because it's yet another. You don't wake up one day and be like, I'm going to spend 30 minutes to open an account. So the more we made it easy, the more people have been signing up. And after that, you have the choice to either ask Sarwa to manage the money for you.
Okay.
Or if you want to do it on your own, you can also do that. So let's say you want to buy a fund that invests in the top 500 US companies. That's something you can do on your own. You can buy a company you believe in, like Microsoft. You can decide to buy Bitcoin as well.
Okay, and if I don't know anything, let's say.
If you don't know anything, probably the best way to start is to hand off the reins to Sarwa to basically suggest and recommend a portfolio for you that suits your risk profile, so that you don't get too exposed to risk, or not too much, not too little, and you have a few months where you can see how it behaves. You'll see your portfolio go up and down. You'll receive a dividend. You'll get a call from a junior wealth associate that welcomes you to the platform. So there's a lot of hand-holding until you might be ready. So you actually
educate also the person, not only just managing the account for the person. You educate them so that they can. Okay.
Exactly. There's a lot of content, webinars, social media posts, just that's tailored for either beginners or more advanced investors. But we try to strike a balance between.
All right,
between both.
Interesting. And is it only for MENA, for the MENA region, only for people who live there?
It's mainly, but they're very, they're very global people. Especially in UAE. So we have clients.
So you don't have to be based there or from there to actually be able to open an account.
That's right, exactly. It's an international platform, but a lot of the starting point and the main customers we serve are in the UAE, mainly.
Okay. I follow you on LinkedIn, and you talk very often about smart investing. What does it really mean? Smart investing.
Smart investing. Yeah, I think it's a lot about avoiding some of the common pitfalls that time and again we've seen people make. So
like what, for example?
For example, some mistakes or destroyers of wealth that are quite common is waiting too long to start. So people might think that they need to find that perfect investment and might delay a few months or at worst a few years before starting.
Yes.
When whether you make 5, 6, 7, or 8%, the impact of that isn't as drastic as how early you started. So that's kind of one way. The second one is diversifying. where whether you're a religious believer in crypto, or no matter how much you believe in it or the narrative or understand it, I think understanding that there's a lot of uncertainty and value in having exposure to a lot of assets, a lot of geographies, is really critical. And
Okay.
you know, we're from Lebanon, so you can imagine the impact of the cost of not diversifying where your money sits, where you invest. There's a lot of lessons from all over the world on being smart with putting your money across multiple areas.
Okay.
Smart means low fees, you know, making sure
Okay.
your fees aren't eating up your returns, making sure you know what you're paying. And then finally, I would say managing emotions, where smart investing isn't the worst thing you can do is to buy high and sell low.
Yes.
And panic at the idea of reading a bit too much into the news. So that's something that we talk a lot about, the psychological part of investing.
Okay.
You don't need to necessarily buy low, sell high,
Okay.
because I think that's sometimes also too good to be true, but rather buy high, sell higher.
Okay.
Is good enough.
And do you see any common behavior actually for
Yes, a lot.
Okay.
A lot.
Okay.
A lot of it is good, actually.
Okay.
We're pretty proud of the behavior because
All right.
we've lived COVID, we've lived 2022, very challenging year. We've
Yes.
lived, you know, each year almost had an event that's pretty crazy. Recently, we're living one at the moment.
Yes.
So whenever we've seen, actually a lot of people are keeping their cool.
Okay.
If anything, I think a lot of them are doubling down on opportunities they like when they see that they're starting to see price drops as discounts.
Okay.
Which is
Okay.
something typically professionals do, and now we're seeing individuals also embrace that behavior.
Do you have companies investing with that?
We have a few. We have a few. Not too much, but it's.
So it's also open for companies, not only
some
for
companies.
individuals. Okay.
Yeah, like the Treasury Department, if they have idle cash they want to put to work, we also are seeing that.
Okay. So Sarwa is now profitable, right? So you're not gonna walk us through everything, but just, you know, key milestone to become profitable.
Oof. I think we touched on some of it. To recap, like I think strategy is really, really critical, because you can do everything right, but if the business model and what you're building isn't the main event, that's going to be challenging. So for us, that shift from robo-advisory or managed investing to self-directed was very pivotal. It completely changed our business, our growth, our deposits, like any metric you look at. Once we were able to identify that customers, they're not asking you directly, but there was a lot of signs saying they want to do it on their own. I think that was a very pivotal moment to it. I think cost is also very important. So making sure, and we've learned the hard way on, you know, hiring too much, keeping a lean team, measuring like revenue per employee, being much more disciplined on cost, and embracing constraints is very, very important. Pricing is very important as well. I think in our space, a lot of people jumped on zero commission, where customers didn't want zero. If anything, they found it a bit weird that it was at zero. They were like, what's the catch, when there was no catch?
Yeah.
So introducing a low fee actually ended up building trust. One of our biggest customers came after we increased our prices. So it's something to also, as a founder, to level up, because I think we talk a lot about marketing, a lot about product.
Yes.
These are the, you know, building teams. These are probably the top 3 covered topics of building, but pricing is this overlooked area to price based on value, not just based on your costs.
Okay.
And then I think lastly is probably just being patient.
Okay.
You know, an investor.
How long did it take you to become profitable?
It took us 6 years roughly from launching.
Okay.
And we could have gotten there earlier. So it needs actually, that's another thing. You need to be intentional about, we want to get profitable.
Okay.
It's a lot of founders, I think we believe it's going to happen and we're going to grow our way into it.
Okay.
But it doesn't happen that way, because as you grow, what growth does, it sends you a signal to you and your team and investors to keep doubling down more.
Okay.
So growth is quite addictive in that sense, where you see growth, you up your marketing budget, you up your team size, you staff more experimental projects.
True.
That only boosts your cost. So when you say, no, I refuse, I'm gonna get profitable, you start resisting that these bad decisions of the things that get you away from profitability.
Okay, interesting. And in terms of investment, so you did many rounds of investment, right? So if there's like one or two advice you want to give today to founders who are raising funds, what would these advices be?
I think the first one would be explore other paths would be my first advice. Because I realized we jump too quickly to raising funds. And a lot of conversation, I feel like we feel it's the probably the only path. But it's as if, you know, raising funds is almost like, if I draw a parallel for athletes, it's like you're going to the Olympics of business, where you need to deliver quite crazy outcomes, actually. You need to give you an example, a milestone we crossed last year was the 10 million ARR mark, and only 0.4% of companies get to that stage. So by raising funds, you are committing to, you know, that 10 million, $100 million revenue path. When you barely gotten started, you're just getting to know what kind of founder you are, what kind of business you want to build. There's a lot of uncertainty that raising too quickly commits you to a certain path.
What would be the other path? I mean, if you need some money, some funds, right, to start? I
think it's a good question. Like if we explore that, consulting could be a path. Like, that's one path that's quite common, where you know, people consult and then, you know, productize their offering into a product or a business. That's quite common. Or you know, having a conversation I was having with a friend last week is, you know, having customers pay for your development. If he's seeing so much success in when he presents a solution, his only gap was he needed implementation time to customize it to certain clients. But it was almost so easy for him to sell his service that there's probably a willingness to pay from his customers that could also fund his business. So why go through the motion of raise capital to so that the client has the solution, only to pay back the VCs with higher pricing for the customers?
I see.
So it's almost inefficient to do VC and back to customers, raise the pricing to pay back the VCs, when you could just have a direct conversation with the customer. So these are just two. I think there's you know, other trends of people just doing one round and one round only. If you can do that, and just using that first round to get to profitability. There's, you know, many ways, but and that's one part. But if you really must, I did post actually on a video on it, I think yesterday, where the three things that worked for us is like creating urgency. So not dragging this out for too long. Where, you know, starting a lot of discussions at the same time, but just the virtue of having a lot of meetings at the same time, you don't need to start creating fake urgency. People know that they might miss out on the deal, and you know, they're gonna know you're talking to a few. And the investment industry, it relies a lot on who's in and all that. So I think creating urgency is really critical. I think the second part I would share is playing to your strength. I think we're, you know, whether Mayssa's raising or Mark, we would approach it super differently. So customizing the process to what you are good at, I think, is very critical. For us, that meant like when we get a request, we would go all in terms of building slides and a story and a visual storytelling. We were coming from consulting, so we use that as an edge to, if someone asks, what's your marketing strategy? We don't just reply in text. We would build out like a whole deck on, this is how we're thinking about it. So people feel like it's a very personalized process.
Solid,
And then the team, I think involving the team at the right time makes a lot of, not too early, because initially it can be very distracting, but towards the end, I think inviting them for an event, getting to know the team, showing them that this is not just about you as a founder,
Yes.
and you've built really strong people around you, I think is very, very critical.
Okay, nice. Mark, how do you do to stay grounded? You've been, on many like channels. You are Forbes 30 under 30. You're now profitable. You have a lot of followers on LinkedIn. So you're kind of, a well-known figure, in the fintech industry as a whole. So how do you do to stay grounded and humbled?
I think good habits help a lot. Good sleep, fitness, saying no.
Yeah.
Saying no a lot.
Okay.
And it's been a lot of iteration to... I would really geek out much more in the early days than now on like how I'm spending my time, blocking uninterrupted time, no meetings before noon.
Okay.
Yeah, I think just a lot of it's a lot of small things that really add up.
Okay.
And I think the org also, the way we've set up the org, more importantly.
Okay.
There's the individual, but as a team, I think each one at Sarwa has their own vertical.
Okay.
And we work asynchronously where, we don't need meetings to progress on something. We work very well remotely, on Slack, through threads, everything's like categorized.
Okay.
There's strong ownership from the people we hire. So it's unlikely that, something gets stuck and I'll need to unblock it.
All right.
Versus, there's a marketing, a product, a compliant, like there's operations. Each vertical has its own leader and people looking after it that also, it's not like it relies a lot on me either.
Okay. And what's your leadership style?
Trusting a lot. We built a culture of high trust. So so trust by default is one of the ways.
Nice. Okay.
What else? I can be quite hands-on depending on some of the topics. Marketing is an area that I've realized I'm passionate about, but enough to know when to also step out, and that's been a learning.
Okay.
These are the first few, like some of the main things that come to mind. But I think there's a lot of themes around trust, freedom, ownership.
Okay. Nice.
And yeah.
All right. And if you are to define wealth today, what's wealth for you today personally?
Oof. I think what it's not is a number or it's definitely what I've learned is it's definitely not a number. Before I used to think wealth would be a certain amount of money in your bank account. But with time I'm realizing it's much more how you feel about your money, or just in general about your life in general. So they're very intertwined between how you work, how you view your time, because ultimately one of the main aspects of wealth is to buy back time. So if you're wealthy but you're overworked, you're not spending time with your family, your hobbies, you're unhealthy. Not to pick on him, but Elon Musk is one of the wealthiest individuals on paper, but I don't think too many people would like to be in his shoes. So I think wealth is a very complex topic, but at its core, it's about how you feel regarding your financial security. If you're not in a scarcity mindset, you're not too fearful about money. You're optimistic about the future. You have a clear plan. You feel good about the progress you're making. You feel like you're on the right path to funding your goals, your family, your family life. It's about how you're spending your time. Do you feel like you're independent? Do you feel like you're living like a life that's by design rather than one that happened to you?
Okay, beautiful. Okay. And do you see any trends shaping the investing industry in the next, maybe in the next 5 to 10 years? I don't know if you'll be able to tell me, I think this would happen, or people will invest more in this. Are there any trends or any future trends that you foresee for investment in the UAE or the GCC or the Middle East region as a whole?
Yeah, a few. I would say the basic one I see happening is more people are going to invest.
Okay.
So in the UAE and the rest of the world, most countries other than North America, so North America is at 50 to 60% of people invest.
Oh, wow.
UAE, yes, it's massive. UAE and the MENA, you start to be closer to 10%.
Okay.
So I think one trend I expect is, as there's more content, more platforms like Sarwa, more people being aware of how to optimize their wealth, how to find passive income, how to put their money to work for them.
Okay.
There's going to be more success stories, more people going and investing. So that's a clear trend I see happening, where there's going to be more investors. It's going to go more viral. It's going to have its moment outside of the US as well.
Okay.
I think what they're investing in, if it's going to matter on the performance of how the next few years shape. But in general, I think stocks, gold, stocks and gold I would probably be more bullish on as areas that have stood the test of time.
Okay.
Crypto, question mark. Definitely seeing more adoption. I think we posted yesterday, it went from like 10 to roughly 30% of customers now invest in crypto.
Okay.
So we're seeing adoption there, but I think it's very dependent on, and some people laugh at me when I say it's really new, because they're like, what do you mean it's new? It's been around for a while. But sometimes it's nice to look at a lens of a couple of decades, hundreds of years of what stood
relatively
the test.
to others. Yes. Okay.
I think, but the biggest trend I would say is self-directed finance, where more people I think are going to take control of their investing, especially with ChatGPT. We're still very early days of that, and although we were saying there's a lot of hype around AI, I think there's still the power of having so many answers, so much research, data, content at your fingertips. I think will make people more comfortable to invest on their own.
Okay.
So that's something I would say is gonna only get more pronounced with time.
And Mark, what's next for you? What's next for Mark Chahwan in the next 5 to 10 years?
I think scaling Sarwa is to new heights. Keeps me pretty busy.
Okay.
So yeah, we hit $500 million last year. Now we're focused on hitting the first $1 billion, $2 billion of assets. We reached more than $100 million of gains last year. So we want to continue magnifying the impact to show this is wealth that would have probably went into the balance sheet in terms of interest payment to banks, where now it's going to the pockets of people. So doubling down on that. I think it's still magnifying a lot of the scale of Sarwa.
I have one last question for you that I usually love to ask my guests at the end of the podcast. If you have only one book to recommend, which book would it be and why?
I sound like a broken record, but I'll recommend Anti-Fragile by Nassim Taleb. Yeah, it's because it's a very complete book where it covers philosophy, investing, and I think it has a nice touch for people in the Middle East, where he's a Lebanese American author with a lot of experience and very independent. So and the style of it reads like a diary as well. So I think there's a few things that I appreciate about the book, but one of the main things is that independence, where after reading it you almost become allergic to a lot of other books that you feel like there's always an agenda or some agenda behind, or even if it's small, you start to to sniff it. So I think it's a very deep book that there's so many lessons that can apply to people's lives from recommending it.
Nice, thank you, Mark. Thank you for your time. Thank you everyone for keeping up with us up until the end, and as usual, keep evolving.
Great, so this was another great episode. EVOLVE Voices is a podcast from EVOLVE Commerce Club, the #1 private community, where we connect senior commerce professionals in more than 40 markets. Every week, we invite one expert to share their perspective and their knowledge. If you want to know more about EVOLVE, look at the link in this episode description to request your invitation. I hope to see you in the next one. Bye.